Welcome to the Not an Agent March Vancouver Statistics Show. My name's Jeff. This is Daniel, and we're not financial advisors, so talk to your financial advisor before making investment decisions. But even though this is for entertainment value, I think you're going to see some interesting insights here. So three things we wanted to talk about today. We want to talk about how things are going post C-word. So after the pandemic was declared, we're going to talk a little bit about inventory and what's happening with inventory this month and going forward into April. And then we're also going to talk about houses that are going over or under asking price and how initial asking prices are changing and how that's impacting the perception of the market right now. What we're looking at here is we've got all of our different regions. So, West Van all the way down to Langley. And then we have months of inventory. So Daniel, do you know what months of inventory means? Do you recall?
Yes. Explain it for the viewers.
Yeah. So our months of inventory, it's you're basically taking the inventory at any given time. And then you're taking a month of sales and you're dividing the inventory by the months of sales. And that tells you how many months, like if nothing else happened and sales continued going, it tells you how many months it would take for all that inventory to be sold. Okay, so it gives you a good indicator of how busy a market is.
And this chart's important because you've broken it down by what I think is the sea change is halfway through March. It's basically when the NBA canceled their season. All the sports games got canceled. And it seems like the WHO also declared it a pandemic. It was basically mid-March. So that's where the dividing line there is.
What I'm seeing here is months of inventory is increasing. Now, normally we wouldn't see that going into a spring market. Normally that would happen towards fall, maybe even into December. But it's happening now in April.
And I think that one of the interesting things is, so that second column is the post-COVID projected. Mm-hmm. So we were talking about the time frame it takes for somebody to basically close on a property. And we're talking about maybe 2 weeks. So if you think about halfway through March was a sea change where people realized, okay, this is a big deal and it's not going away. So that second half of March was some people bailing. They could get out of their deals, mm-hmm. but it was some people who were kind of locked in. So They had to complete throughout the second 2 weeks of March, which means everybody in April, this next coming month, they're going to be buying into a market with eyes wide open. They're going to be deciding to buy into this either because the price, people are chopping down prices so far that how could it not be a deal? Mm-hmm. Or they're insane. They're just saying, I'm going to buy a house anyways.
The other thing on this particular graph that I'm finding interesting is the average sale price that we're seeing. There's not a lot of areas that have an average sale price of over $1 million anymore. That used to be a good chunk of this. And now we're seeing most of it under $1 million. So the needle's moving a bit. Okay, so let's talk about inventory next. So this is the February chart. So, here's a few price points to pay attention to. Here's the 500,000 price point. And, we said last month, that's where most of the things are sitting. That's your $1 million price point. And then you can see the chart just kind of flow out here. So this month, instead of 1,083, now we're sitting at, 1,200 at $500,000. And every price point here, it's all increased. When we take a look at the April numbers, you're also going to see that not as many people delisted their properties, leaving them on the market. Normally at the end of March, we would have seen a massive delisting again as listings expired. This month, we're not seeing as much of that. People are leaving their properties sit on the market. They're looking to sell. The next thing here is the amount of listings that were sold over or under asking price. So our ratio right now, we're sitting at 563 to 1737.
I think everybody remembers, 2-3 years ago when pretty much nothing was selling for under asking.
Mm-hmm.
So the fact that a huge number of the properties are selling for under ask is a big indicator to me.
Yeah, and it is the majority. Some are selling at asking price, not very many. So that's really telling to me that the market's changed.
That's huge, because there was a long time where, especially in the buildup into the bubble, I'll say it, there was nothing selling for under asking. There were, people trying to outbid each other, bully offers, all that. And this is showing that is definitely falling off. I would speculate that over asking price, that 563, a lot of it would be in the lower end, the condo market, because that's what we were talking about in one of our previous shows, was that $400,000 or $500,000 mark. People are trying to get in there. There's a bit of FOMO in that space.
So if I was going to make a few predictions on this, I would say the months of inventory are going to build pretty quickly here. One of the big risks to deals closing is if land titles has to close down. So if we continue to progress towards higher levels of alertness with this pandemic, there's a good chance that the land titles office closes down and then real estate just stops. So if real estate stops, these listings will still be there, but you're not going to be able to close until that land titles office opens again. So that's really going to impact things. If you don't feel safe going through another person's house, a lot of people buy based on emotion. And if you're not able to get emotionally attached to the inside of a house, what's the likelihood you're going to buy it? We'll mostly see investors and people who might feel like they're up against a wall, even though they can't be evicted, buying homes.
Yeah, I think that's an interesting one. That it's completely true. When you're buying a property, you really got to walk through it, because it's all your other senses. Your sense of smell, obviously everybody who's looked at properties, what's the smell like? It's your ears. What's the noise like? What's the traffic? Do the floorboards creak? It's really hard to move a property that people aren't walking through. And that brings up another question, is what do you think the mentality of people is? Like, they're listing their property, but if I'm a homeowner, I don't want anybody walking through my home. Thank you very much. Maybe a lot of these listing properties are empty properties, or Airbnb, or long-term rental places that they're booting the tenant and saying, I got to jump out of this market. I that's the question I have. Who is listing, and what are they thinking? Like, if I'm living in the home, I've got to be pretty desperate to list it, because I don't want people walking through it. And I just don't see who would. I guess, as per your previous question, when I really think about it, I am surprised that the listings are building, because I can't think of the scenario, especially as an owner occupier, that I would list my house. I would have to be very desperate.
Yeah, I agree. I think so if you look at what's happening with Airbnb right now, nobody's booking anymore. You have some of these super hosts that don't actually own their homes. They're leasing 20 units. So they're taking 20 units of rental stock that, depending on how we're reporting on rental stock, they might be listed as rental stock. So we might not have a true idea of how many units are actually taken up by Airbnb. But at any rate, so the first thing that's happening is all of these units are going on Craigslist, Kijiji, wherever, as 2-bed, 2-bath furnished apartments. And so you have the leasee who's trying to rent it out as an Airbnb, trying to put a new tenant in there so that they don't break their contract. Once they figure out that they're not going to get a tenant in there at $2,500 a month or whatever it is, um, they're they're just going to stop paying their rents, and
Hmm.
then the landlord's going to figure it out. Then the landlord's going to take a look at selling the place because the future's pretty bleak right now for investment properties. So how long is
Hmm.
that going to take? It might take a month. It might take 2 months for that to happen. But I think that if you look at the amount of listings that hit the market, what was it last Thursday? It was like 226, 2 bedroom, 2 bath, just 2 bedroom, 2 bath. We're not even talking about like studios or 1 bedrooms. So just
Yeah.
that one class, there's like 220 something units that showed up for rent. So like you throw a whole bunch of supply into the market. What happens? Look at oil.
Yeah.
Oil just it's tanked, and so goes the housing market, perhaps.
Yeah. I think that's a good one for those who want to play along at home. Go to your town, city, look at the Craigslist, and just type in furnished. Not
Hmm.
necessarily fully furnished. You don't want to be too specific, but furnished in the Craigslist, and just look at them and think to yourself, was this an Airbnb? Was it furnished? Is it all decked out? Nice pictures and mirrors and
Hmm.
geometric things. And, you know, you can kind of tell where the inventory is entering the rental market. And I agree with you that it's going to take a couple months for it to all work out. This is the April 1st, yesterday, is going to be kind of a reactionary thing. Landlords are figuring out, okay, are my tenants going to pay? And then there's going to be another reaction on May 1st or
Yeah.
throughout this month. Some like there was basically an anticipation into April 1st. A lot of landlords didn't get the full story until yesterday, and now
Yeah.
they're going to have to react. So I
Hmm.
think April is going to be very, it's going to be extremely interesting on so many levels because of things like that, because of the sea change being halfway through March. A lot of those deals were kind of firmed up. They had to follow through. But now into April, the April numbers are going to be so interesting because everybody entering the market purchasing a house is going to do it with eyes wide open.
Yeah.
Everybody knows what's happening, lockdown, that this may take months and months. So it's going to be very interesting.
It is. It is, and including the banks, their eyes are especially wide open, right?
Yeah, yeah, yeah. The
Yeah.
whole lending space is changing. The the BOC is lowering rates, but yet some mortgage rates are going up.
Mhm.
That's factoring in the risk of the current economic environment. So a lot of moving parts right now. But
Mhm.
April is like where we're going to see a pure month of COVID action
Yeah.
response.
Yeah. Exactly. And the another thing, so you mentioned searching furnished on Craigslist and taking a look as an exercise. Another thing that you might want to do is go into ZLT and or realtor.ca or your favorite real estate site and just search for the word collapsed.
Mm-hmm.
And you'll like this right now in Metro Vancouver, there's 6 deals that just have the word collapsed in them. So they're actually advertising that the deal collapsed.
Mm-hmm.
So usually what that means right now is someone's lost their job. Mortgage company called their employer, either got an answer machine or, they said, hey, this person's laid off with no determinate date of coming back. And then the mortgage company says, sorry, Joe, we're not funding your mortgage. There goes Joe's deposit. Joe's deposit's held in trust by the realtors until,
Yeah, that's a kick in
either,
the pants.
yeah, exactly. So,
You've lost your deal, you've
mhm,
lost your deposit,
yeah,
and chances are you've lost your job.
yeah,
I mean, the people on the other side of that collapse deal are hurting pretty bad right now.
yeah. And what can you do after that? Your deposit is probably, depending on the realtor you're working with and how they work it, your deposit's probably a good chunk of your down payment. So, in the short term, your purchasing power is cut. Long term, you might lose it. So,
Yeah, yeah, that's a huge, and I guess you'd have to say that that search is only showing the realtors that decided to add that into the notes of the listing. So there's probably a lot more collapsed deals that they just are deciding to omit, or they forgot to add that. No, pretty much no matter where you are in Canada, over the last 20 years, real estate has been a pretty sure bet. Whether you're in Vancouver or Toronto, maybe not Alberta because it did peak out there, but in the two cities that matter, Vancouver and Toronto, and even where I am on the island, real estate has been a pretty safe bet. If you had bought any time in the last 20 years and held for more than 7, you're golden. Mm-hmm. If that changes, the whole way Canada as a nation looks at real estate will change, and it will take people by surprise. It will shock people, because a lot of people have only grown up with real estate going up over the long term. And the thing is, so much of our wealth as a nation, our economy, is built on real estate. So that's devastating.
Yeah.
Like, what do we do?
What was the GDP attributed to real estate commission?
I think it's 1/5, 20%.
Yeah, that's gross.
If that goes sideways, we're hooped. We're hooped. I had somebody telling me a couple of weeks ago, definitely not advice, but he said, as far as the Canadian dollar is concerned, run for the hills. Get out of it. Mm-hmm. Get into, he had some suggestions, but this could go very, very wrong for Canada. Now, we should probably end it there because that's a bit doomy. Maybe we could talk about something a bit more positive, because that was like, whoa, suddenly very dark, very dark. What's the positive that could happen?
Well, the positive that could happen is, if house prices come down, people can afford homes again. Or, rents come down, anything deflationary right now, especially in the two major centers. Like, I think an area like Winnipeg, they're probably fine, because there was never any run up. Like, they've had a couple dips that came back, but it's never been inflated. Like, you can buy a 16 suite apartment block in Winnipeg for $1 million. You can't buy a lot here for $1 million, it seems. So, like, really and that's what it should be. Like, if you're buying, if you're buying something for $1 million, it should be pretty big. It shouldn't be just a house.
Yeah. Like, I look at, I look at the teardowns in Vancouver for 1.52 million, and I'm like, how does this not make sense to people?
Yeah.
How is this not throwing up a massive red flag that a teardown is $2 million? Because you know what it is? I think it isn't people looking at the multiple of wages. It's been a slow increase, and it becomes a new normal every year. Every year.
Frog in a pot.
Yeah, it's every year is a new normal. I've even noticed it. I look at prices and I have to stop myself. I think, oh, well, that's actually pretty aggressively priced. And then
it's only going to cost me $5,000 a month to service.
Yeah. And then I step back. All you do, this is the one tool I use. Look at prices 5 or 10 years ago and ask yourself, what has changed? If prices have doubled, have your wages doubled? They haven't? Well, that doesn't make sense then. That does not make sense. There's froth, there's outside influences. And the thing I always go back to is nothing lasts forever. Nothing lasts forever.
Including this show. This has been Not an Agent.
I'm excited for the April show. Like, this is kind of us speculating and kind of seeing where the trend is. But the April, like, I guess it'll be the first month of May when we do a stat show. I think there's going to be fireworks.